Hey guys, welcome to the channel. We're talking about GameStop yet again. We have a lot to cover. First, what is GameStop doing? What are their intentions and what they're not telling you? The cash situation and why it matters. Ryan Cohen's statements and what he isn't telling you and why I believe he didn't say very much and what I believe they're going to do and what their intentions should be. Why I support GameStop. And the last but not least and most important part of this video, I'm going to explain to you guys why GameStop is likely to explode more than it did previously in the coming weeks and months. So stick around for that. If it's your first time stopping in, guys, be sure to subscribe and tap the bell. And of course, give me a thumbs up if you like the video. Before we get to today's video, if you guys like the strategies you see later on in this video and my other videos, and you're serious about your financial future and are committed to becoming a better trader and are looking for help, I run a Discord and training course and one-on-one coaching. You guys can sign up for it anytime. investwithcorey.com/learn right there on the screen or in the information box below. Limited spots remain, but if you're serious, I really want to help you. Let's dive into the video at hand. First, I just want to point out that I'm not a financial advisor and this is not financial advice. I'm just here to help you guys, coach you and mentor you on strategies, tips, fundamentals, technicals, financials, and different stocks movement in the market. However, the decision to buy a stock and ultimately which stock to buy and how much of a position size to have is ultimately up to you as it's your money. Starting off with number one, what are they not telling you? Well, I don't think they're really publicizing or even acknowledging the fact that they had 2 share offerings. The reason they did this was to raise capital, but there's also another agenda behind that, and I believe it has something to do with stopping Roaring Kitty from having too much power over the shares or too much influence over the company and stopping the rising stock price and also allowing them to dilute shareholders in order to raise revenue. This is not unheard of. Many companies doing it. Most recently, the biggest one that I know of is Mullen Automotive, diluting the living dog crap out of their shareholders. This happens all the time. Startup companies and companies that have been around a while but aren't profitable typically dilute shareholders to some degree in order to profit. Not to mention we have hedge funds and big banks and a lot of short interest that are trying to keep the stock down, and it's heavily manipulated, and there's no denying that because the short interest was peaking around 141%. Now it's down supposedly to 14 to 20%. I have reason to believe short interest is more in line with 40 or 45% at this point in time, but it's hard to pin this down on an exact number. Number 2, the cash situation. And why does it matter? Well, because they raised over $3.1 billion in the 2 offerings, and they have over $1 billion in assets even after you deduct liabilities, they have over $4.4 billion in cash. This pretty much means they can restructure their business model, renovate buildings, expand, close stores that aren't profitable, open new stores, or just entirely close all stores and revamp the website. They have multiple paths to productivity as well as profitability, and they could do the SPAC, which is the acquisition and merger, and become a holding company, which it looks like Ryan Cohen might be doing secretly, as they did not mention any of this in the recent and annual meeting. I also believe they lied and fabricated reasons on why the meeting was moved from Thursday to Monday. I don't think it's a malicious lie. I think it's more of a white lie because they didn't know what to say or they didn't have their story straight, because it seems like they're trying to cover something up. It doesn't mean I'm not bullish on the stock. As you'll see in section 5 of this video in just a few minutes, why I support GameStop, I'm going to explain to you why I'm bullish. But I really am bullish on GameStop long term. Short to midterm, I'm neutral to bullish. There is some bearish sentiment around the stock because of expectations not being met. Roaring Kitty and the overabundance of pump and dump and the hype on the stock is not necessarily a good thing. Number 3, what is GameStop and Ryan Cohen likely to do? Well, I guess a lot of people are disappointed because they thought Roaring Kitty was just going to go ahead and be elected on the board or have some executive role, which is a little bit unrealistic if you ask me. It's not very realistic to have a meme pump and dump social media influencer on your board. But then again, I guess that sort of doesn't really say much considering how Ryan Cohen handles things and how he handled Chewy. And because of the whole fiasco a couple of years ago in GameStop, there's a lot of uncertainties around the stock. But what we do know is that a lot of people support GameStop and a lot of people don't want it to go away. And it stands for a lot of fun, and it also stands for what the people support. So there's a lot of good that also comes with GameStop. In my opinion, it's likely that Ryan Cohen wants GameStop to succeed as a game hardware, trade-in, software, and gaming store. It's very unlikely at this point that I would say that Ryan Cohen is just going to ditch GameStop completely and go with a complete SPAC or acquisition acquisition merger company or a holding company, it is unlikely that he's going to solely take that path. It doesn't mean he won't do it, but it is very unlikely, in my opinion, that he is going to abandon the store and brick and mortar GameStop, core fundamentals, bread and butter of the business. I do not believe he's going to walk away from that, and I don't believe that he will fail in his quest to bring GameStop back. Number 4, Ryan Cohen's statements in the meeting and why he actually did this. Now, you have to understand, as a CEO, you have certain responsibilities to a company. Number 1, you're not going to dive into the hype and put some guy like, Keith Gill or Roaring Kitty on your board or your executive positions. You're not going to give in to that type of social media pressure, because that would show signs of weakness. It would also show signs of frail structure within the GameStop, I guess you could say, organization and board of directors. That would be a very weak position. It's not a good one, and Ryan Cohen understands this. And as a business owner myself and someone who's been in business and has a degree in finance, you don't ever want to show cracks in your infrastructure, and by putting a social media influencer on your board or even having him in your company at all as any form of influence on the inside as an insider is a very weak play and not a good one. So the fact that he didn't do this or didn't even acknowledge it just shows his strength and just shows that he is willing to put the work in to make the company better. I'm not saying I'm buying everything he's feeding us, because a lot of it's probably garbage. However, I do have hope that he has the strength within him to bring GameStop back. It's highly likely that he's just being pretty reasonable with this, and when he said that they're focusing on profitability, it is likely that this is his true intent and he believes what he's saying. And I, for the most part, believe that to be a viable option, because they never had the cash to go forward with anyway. Now they do. And because they now have the cash to go forward with GameStop, they can actually invest in things that are working and cut funds in things that are not working. This gives them a little bit of time to figure things out. Sitting on $4.5 billion in cash is going to give Ryan Cohen everything him and company need to do to turn this around, as long as they have a good game plan. So I guess that really begs the question, what is the game plan? What should they do? Well, I've talked about this with a lot of my subscribers and my students in my Discord, and we talk about this quite often. The big thing about GameStop right now is they have to focus on what's doing well for the company and cut out things that are not doing well. Focus on hardware sales, getting people in the door to buy games, enticing them to want to come into the store to buy games, maybe holding tournaments in the store, and my biggest thing, maybe even selling second-hand old generation consoles like Nintendo 64, GameCube, Dreamcast, Atari, competing with all the mom and pop used game stores and being able to incorporate it into one giant store where you can buy new hardware, used hardware, trade your hardware in no matter how old it is, old games, collections. People can bring their garage sales to GameStop, gaming tournaments. There's all kinds of things they can do with $4 billion in cash to expand the GameStop empire. They can also invest into independent gaming studios for a part stake, maybe a 20% investment into Rocksteady Studios, as an example, who make the Batman game. That's just an example. They're probably too expensive, but that's just one example. Another example, Bethesda, something like that. Look at Deep Silver, who used to be involved with Dying Light and the Dead Island series. They could invest money into them, bring the production team over to the United States, and advance the team with better hardware, better employees, a better direction, because they're not doing so well, but they could get their hands dirty with a certain amount of control or full control over an independent game studio. In my opinion, investing their money into a few different game companies, maybe one or two that are doing somewhat decent and have a lot of potential, and having a 20 to 50% stake, most likely 50% controlling interest, allows them to bring in more money on the sidelines while still allowing GameStop to become profitable and flourish. And by running them both, Ryan Cohen can turn this into a $100 billion market cap maybe 5 to 10 years down the road. Who knows? Number 5, why I support GameStop. Well, it's no surprise that I'm in my 40s and I have a lot of experience in trading, investing, and a degree in finance, but it doesn't take away the fact that I ultimately am an avid gamer at heart. I grew up going to Funkoland in the 90s, which in turn defunct and turned into Babbage's, I guess you could say, because Babbage's was a store where you could trade in your games, buy used games, new games, all that stuff. I used to go to Kmart and Toys R Us and just overall loved game shopping with my parents. As a kid, that's all I did. That's all I loved. Was very passionate about it. And not only that, as time went on, Babbage's got bought out by Electronics Boutique. They still operate in Canada as EB Games. They used to be EB Games in the States. However, GameStop bought them out and they own EB Games in Canada. Maybe it's a good idea that GameStop implement Funkoland, Babbage's, or Electronics Boutique in certain areas of the country to bring back some nostalgia. Opening up a Funkoland would be amazing. But not only that, I also support gaming in general, and this is the last last bastion of game stores. I want my two boys to be able to live the way I did and go into a store, physically pick out games and see them in front of his own eyes, where he can reach out and touch them. Something tangible. Anybody watching this video understands shopping at Electronics Boutique, Funko Land, Babbage's, Toys R Us, Kmart, any of these stores. Even if you're in Canada, there was a store there called Towers. Anybody remember that? Anybody remember Zellers in Canada? That's another store. Best Buy kind of sucks. Amazon's trash as it's delivered to your door, which is basically the same as digital because you're not going anywhere. I have a very large gaming collection. I'll show you there on the screen some photos of my gaming collection. I have every system in almost every game ever. I've invested over $50,000 into classic gaming. I have two huge gaming rooms, including the room that I'm in right now. Behind me is two massive shelves with over $10,000 in classic games from every console, ranging from Coleco in the 70s all the way to Nintendo 64, GoldenEye, Conker's Bad Fur Day, Perfect Dark, all the way back to the old Coleco days. I have everything, and I have 10 to 15 copies of every console. So I support GameStop, not because I'm a pumper like everybody on YouTube, and not because I blindly follow like a sheep. I actually believe in GameStop and have hope and faith in GameStop because it's everything my childhood was. I don't think that GameStop's going to pump to the moon. It could. I would hope it would, but I can't say that. There's no saying where it's actually going to go, but I hope it does. And I support GameStop because I want them to succeed, and I'm also looking at things in a realistic perspective. Number 6, the explosion. And the big part of this video. This is the most important thing that I'm going to tell you guys in this video right now. First, like I said, this is stuff I talk about in my Discord. If you guys want to join my Discord, my one-on-one coaching and training, surround yourself with like-minded people, and you want to learn, and you're very serious about financial freedom, I have limited spots available. You guys can join right there on the screen, investwithcorey.com/learn, or in the information box below. I take great pride in helping my students, and I really want to help you, so I hope to see you over there. The big thing here in the explosion with GameStop, is it going to explode or is it not? Well, it's highly likely it's going to. Roaring Kitty will pop out of nowhere at some point in time and start posting again. Remember, he has hundreds of thousands of dollars invested in call options that expire in December. So somewhere between now and December, a lot of stuff is going to happen. Most likely in July and August, there's going to be movement in the stock. We've already seen somewhat of a decline, but we've noticed that the floor right now is holding at 25. I see a more solid floor at 19. We could have a pullback to $19 to $20 range, but I think in July and August, it is going to go back up again, because the moment Ryan Cohen posts any positive news, or Roaring Kitty posts pretty much anything, even remotely close to being positive, the stock is going to move like crazy. There's a lot of volume in GameStop right now, but ultimately, this is not the end. They diluted shareholders, got the price down to 29, then they held back information on the annual meeting, which dropped the price to 25 so that more people can get in. Obviously, shorts are going to still be profiting if the price goes down. Ultimately, on the next earnings, when this cash gets reported and they're shown to be out of debt and sitting in billions of dollars of cash, and if they can become closer to being profitable or break even, that's also going to help us trust them even more, which is going to push the price up. If they have a decent or at least a better earnings report this time around than they did the previous couple of times, it's going to help the price go up. So it's hard to say exactly when or how much GameStop's going to go up, but I believe as we get closer to October, November, if we have two more good earnings calls that at least meet or beat the expectations, and Roaring Kitty posts, and Ryan Cohen has any good news or any updates on the cash and the direction of the company, we could see GameStop push closer to $40 or $50. This stock is going to move. It's just a question of when, and when it does move, it's going to move a lot. So if you're not in before the move, you will miss it. So I highly recommend right now, if you're already in GameStop, you should be selling covered calls right now, sitting pretty and waiting for the big move to happen, because ultimately we know it's going to. Well, I must admit one thing is that GameStop is definitely holding up a lot better than we thought it would. Holding in the $24 range pretty strong. The price is range bound, which is not a bad thing. To be quite honest, a range bound stock is actually a good thing because the price isn't moving up or down very much, so you're not gaining or losing. So if you're holding the stock, you can just sell covered calls and you don't got to worry about rolling those covered calls. You can keep letting them expire. So ultimately, right now, it is a really good thing. If GameStop can just fluctuate between 24 and 25, you guys are going to be in a winning position because you could just sell covered calls week in and week out, collecting all this premium, and it's free, juicy premium. So a stock that goes down obviously is bad. A stock that goes up is good, bad if you're selling covered calls. But a stock that's range bound like this is actually a very good thing. Going to GameStop, we're going to go out to next week on the 28th. We're going to sell covered calls. If you already own the stock, we sell a $30 call for $96, or we can sell a $29 call for $105. If the stock stays the same price, you just keep collecting $105. Free money. However, I want you guys to understand something about Delta. I'm going to explain this just briefly. I do this a lot more in my one-on-one coaching and my training. If you guys are interested, invest with Corey/learn. This is what you have to look for. A delta of 27 on a covered call, safe, especially if you're selling it above the price you paid. So if you paid $27 for GameStop and you have a delta of 27 on a $30 call, you're going to make 300 on the shares plus the covered call. So right now, I would highly recommend looking at the delta. I would sell deltas of 25 or less because GameStop moves a lot. At $29, you're going to collect more premium. At 28, you're going to collect even more, but you're risking getting assigned at a lower price. And we all know that GameStop can move a lot, like an awful lot. You got to take that with a grain of salt. And I would highly recommend looking at the 30, 50, or the 31. Probably 31 because 31 is a 24 delta. That's safer. $78 a week, 85% chance of success. Or you can go 32, 87% chance, $71 delta of 22. That's what I would do. Sell $32 calls week in and week out. If you get assigned, it's not a bad thing because you're getting out at 32. What price did you pay to get in? 25, 15? You're doubling your money plus all the premium, the juicy premium you're collecting. You can always roll out and up, meaning you can roll out 2 more weeks and up to 34. Then you can roll 2 more weeks and up to 35. And you can just keep rolling out and up to save your shares and collect juicy premium. I teach this as well in my one-on-one coaching. There's a lot of advanced strategies that go into this, but there's a way to make more money and save your shares. It's my hyper theta strategy that I uniquely designed in a specific way in order to save shares, save time, and not have to worry about anything in the process. I'm not so sure if I would just run covered calls. I'd also sell puts going a week and a half out. I'd like to get into GameStop for around $22 myself, so I'll just sell a $22 put and collect $72, or we could sell a $20 put and collect $27. This is basically free money. You make it $25 on 2,000, so you put up 10 grand, you can make $100 a week, which is a 1% return, 5% per month, which is in line with being perfectly safe. You could also sell a $22 put, which will get you $72, which is a lot more. This is more or less about a 3.5–4% return per week. If you want to get a little bit more aggressive and sell a $23 put, this right here is just about a 10% return per week. And if you're bullish on GameStop, this is the ultimate way to do it because you could be selling covered calls at 30 or 32 and selling cash secured puts at 23. You'll be making $200 a week and you can't lose on both directions, meaning there's no way that the stock price could be in 2 different places at one time. So if you're selling puts and calls, only one of them could lose. If the stock stays range bound, then you're going to win on both positions. Selling $32 covered calls and selling $22 cash secured puts. If you end up getting a sign at $22, that means all your covered calls are free juicy premium. They help offset the loss of your cash secured put. So if you made, let's say you have 200 shares and you sell 2 covered calls at 32 for $70, make 140. Then you sell 2 cash secured puts at 22 and make another 140. That's $280. If the stock price falls to $21, sure, you're going to lose out on $100 per 100 shares twice, which is $200, but you collected $280 from the covered calls and the cash secured puts, 4 separate trades. Now you're in the positive $80 and now you have 400 shares. This is part of my hyper theta strategy that I teach in my Discord and my one-on-one coaching, and it can greatly help you grow your portfolio, but there's a lot more to it than just this. I believe Ryan Cohen can bring GameStop back from the brink as long as he's honest with himself and honest with his shareholders and with the general public, and just does what he says he's going to do and really thinks about what's best for GameStop and takes the best viable options for GameStop and executes them. We could see a very strong company going forward, which could ultimately be involved in a lot of retail stores as well as indie game productions as a holding company and a even bigger and better hardware gaming store with trade-ins and software, games, collectives, and all kinds of different things. Is it really game over? Ultimately, I don't believe so. If you guys enjoyed this video, be sure to subscribe and tap the bell. I really appreciate you. Give me a thumbs up if you guys enjoyed, as it helps the channel grow immensely. If you guys are looking for more strategies to maximize your portfolio, don't worry that this video's over. I got another one for you, and it's right here. You guys are going to love this video. Be sure to click on it. I will see you over there. And remember, in the meantime, let's grow our wealth together. Take care, guys. You're still here? Click the video. I'm over there waiting for you right now. I'm in 2 places at once. Didn't you know? I'll see you guys over there.